Hello friends, welcome to our today's class where we will be discussing the importance of accounting concepts, accounting standards, the accounting principles and the accounting postulates. So this topic is so important that according to me, if you really want to know accounting or understand the accounting concepts, this should be your week 1, lecture 1, slide 1 stuff. It's that important. If you want to do anything in the accounting world, you cannot escape these accounting concepts or the accounting standards, the postulates or the principles, right? So before we understand this, let's take an example. Suppose you are a cricket fan and you want to know how well your favorite team is doing in the World Cup. What you do is you look at the points table, you look at the points table, you see the points, the runs, the wins, the losses, or the net run rate, the wins and losses of each team. You also look at the statistics of each player in terms of the runs scored by them, the wickets taken by them, the number of boundaries, the number of sixes, number of catches taken, etc. What you do is you use this information to compare and analyze the performance and position of your favorite team and its rivals. You also use this information to predict the future outcome of this match, isn't it? Now imagine if there were no rules or no standards for recording and reporting these cricket statistics. How would you know how many points, how many runs, wickets, wins, losses, and ties each team had? How would you compare the teams or the players without rules or standards for recording and reporting? The cricket information and the statistics, cricket would be chaotic, confusing, and unreliable. You would not be able to trust or understand the information and statistics that are presented to you. Whatever numbers given to you would be of no use or they would be meaningless because they would not give you any direction as to where you are or where your favorite team is and where it could be in this tournament, right? So this was all about the cricket. Talking about the economic world or the business world, we know that accounting is the language of business. This we have seen in our earlier class that accounting is nothing but it's the language of business and the accounting information is used for the purpose of decision making. The financial statements or the report cards are prepared so that all the stakeholders, be it the management, investors, banks, government, etc., can make some decisions based on them. Do you know how these stakeholders make decisions for all the different types of organizations with different sizes and different locations? If you look at the slide here, here you come to know about the accounting information, users of accounting information. These are the users, which means the management uses the accounting information. Similarly, the customers, investors, banks, tax departments, general public, researchers, they use the accounting information. This information is related to these type of organizations. The organization, as we have seen in our earlier classes, there can be various types of business entities. It could be a sole proprietor, it could be a partnership firm, it could be a company, be it private company, public company, government, non-government organization, one person company or LLP. There can be many types of entities. In other words, I would say the bank would be dealing with sole proprietor as well as the partnership firm, the companies, the NGOs, the one person companies, the limited liability partnership, and the government organization or the government companies. Similarly, the tax department has to deal with all these type of entities. Again, this sole proprietor could be engaged in the activities of manufacturing. He could also be into the activity of trading. He could be into the infrastructure business. He could be an IT based company or It could be a banking and finance. Sole proprietors generally do not are not permitted into the banking and finance. It would be the company only. Maybe the sole proprietor is involved in e-commerce business. So what happens is, whatever type of entity is, they may be engaged into different types of activities. Now the big question is, how these guys, the decision makers, would be making their decisions based upon the various activities or based upon the various entities is the question now. Everything is differently located. Maybe here you have some domestic companies, you have some international companies. So what happens is, you need to have something in common. So what that common thing is, the answer to that would be the accountants of these organizations, be it a sole proprietor, be it a partnership firm, be it a company, or an NGO or one-person company, any form of organization. The accountants of all these organizations follow basic set of principles and the concepts whenever they practice accounting, which means, in other words, I would say, what the accountants of all these organizations do is, they form a they have a set of principles or set of rules which they need to follow or which they are following whenever they are practicing the accounting. All the accountants across the globe follow these principles or these concepts or these rules. By following them consistently, by following them consistently, which means year after year, they achieve reliability. Reliability means the information based upon which you can rely. Relevance and comparability. In other words, the accountants, be it the irrespective of the business unit, be it a proprietorship or a partnership or a company, what the accountants do, they follow a certain set of principles or certain set of rules whenever they are into the accounting activities or accounting recording, right? So once, if these principles or rules are followed consistently year after year, then we would say that whatever information is generated by them would be reliable, it would be relevant for us to be decision making, and since it would also provide us with the facility of comparability, that would be of more use to us, right? So we would say, by following them consistently, they achieve the reliability, relevance and comparability in the information they produce. So now I think we are a bit clear about what role does the accounting rules play whenever we need to use the accounting information for whatever type of business or whatever type of activities which are being done by an organization, right? Now let us see the basic framework of accounting or the structure on which the accounting process happens. We say that accounting fundamentals, whatever they have evolved through four stages, namely the concepts, the standards, postulates, and principles. The concept is nothing but an idea, a general notion. Say, for example, when I say entity concept, which we have discussed in our earlier class, we say that the entity concept says that we need to have an idea in our mind whenever we are doing the accounts of any organization, that we are working for the entity, not for the individual or owner. This is also called a separate entity concept. So concept is nothing but the idea or a general notion, right? Then we talk about the standards. What are standards? These are the rules, the set of rules which are issued by the appropriate authorities in each and every country. Their intention is to make things comparable, make the measurement proper, quantify them, assigning values to them, which means These rules would tell you as to how you need to account for or how you need to disclose your accounting transactions so that it provides some meaningful information to the users of accounting information, right? Then we talk about postulates. Postulates are nothing but the assumptions which need not be disclosed separately that these have been followed. We have also talked about this in our earlier class, wherein we have said that, say for example, if we talk about the Indian context, Indian company, it is assumed that all the numbers which are given to us are Indian rupees. This is an assumption. Need not be mentioned separately that all these figures, generally if you look at the annual reports of any organization, you would find that it is also mentioned clearly that all these numbers are in Indian rupees. But these are the assumptions which are taken to be true or real, right? Principles are nothing but the laws or the methods or the rules of conduct which are applicable on a company to company basis. The accounting principle of an organization may not be the same as compared to the accounting principles followed by the other company. But when it comes to the accounting standards have to be the same across all the companies. So we would say that the basic framework of accounting or the stages of accounting would be the concepts, which is an idea, the standards, which are the rules, then postulates, which are the assumptions, and then the principles, which are the laws made by the organization or a company, which is to be applicable on that company only. This may or may not be similar to the principles of accounting of the other companies. Now, at this point of time, you need not be confused with these terms. All you need to understand is all these talk about the rules. All these talk about the methods of preparing and presenting the accounting information. What if we follow these accounting rules or principles or practices? What happens is we would be in a position to find out the result in the most appropriate manner, in which it would be reliable, in which it would be comparable with the other organization. The purpose of accounting, the meaningful information would be served when we follow this basic framework of accounting whenever we are into the accounting process, right? Then we see what generally accepted accounting principles are. These are nothing but the combination of various standards set by the policy boards. There are certain boards, different boards are there for different companies, and then they are accepted by the accountants whenever they perform the accounting functions. As we have already seen that these gap or the generally accepted accounting principles do vary from country to country. Why? Because every country has its own laws or own rules of doing the economic activities. The tax laws of India, the Company Act of India need not be the same as in case of Germany or in case of America or Australia. So the rules of accounting also have evolved over a period of time from different places. So these generally accepted accounting principles are different from country to country based upon the accounting principles which they follow and the standards which are adopted by the company. As we have seen that principles need not be the same for all companies. Similarly, the accounting principles need not be same for all the countries. There are generally accepted accounting principles for different countries. India has Indian GAAP, US has US GAPs. So different company have their own accepted accounting principles. So these are nothing but the rules that the business entities are expected to follow while preparing the financial statements. If they, what happens if the companies do not follow these rules? Then the auditors are given the duty to disclose this fact that whatever generally accepted accounting principles are, these were not followed by this organization, which may have an impact on your decision making. They would issue a red flag saying that be careful whenever you are looking at the financial number of these companies, because the generally accepted accounting principles or the general rules which are being followed by the other companies are not being followed by this company. So it is expected that all the accountants of all the types of organization doing any kind of business are required to follow the generally accepted accounting principles. Clear? Because the generally accepted accounting principles, these are set of commonly followed accounting standards and rules for financial reporting. These are the definitions, the concepts, the principles, and industry specific rules. If you are into a manufacturing or entity, you need to follow different valuation methods. If you are an IT, then you follow some different ways of, say for example, methods of depreciation, like that. In other words, GAP is nothing but a collection of concepts and the best accounting principle practices which are accepted throughout the industry. Now let us see who makes the laws for accounting, or who makes the accounting standards, or who are the organizations or the boards that talk about the who form the rules which are to be followed by the all the entities or organizations which are operating in that particular country. The policy standard board, say for example, if we talk about Australia, there is an Australian accounting board which sets the generally accepted accounting principles in case of Australia. Similarly, in case of China, it is the People's Republic China. In India, it is the Accounting Standards Board, which works under the ICAI, Institute of Chartered Accountants of India, which is the regulatory authority for the accounting standards. In UK, you have the Financial Reporting Council. In USA, you have the FASB, or Financial Accounting Standard Boards, which make the laws or which make the US gaps. So you'll see that the accounting standards are different for different countries, sorry, and each country has their own accounting standard setting up bodies who keep on working and keep on developing new accounting standards as the requirement happens. Then let's see what other regulatory requirements and IFRS are. IFRS stands for International Financial Reporting Standards. International Financial Reporting Standards. These are applicable for all those companies which are called as MNCs, or multinational companies, having their branches in more than one country. So since they are working in or having their operations in more than one country, they need to follow the IFRS, or International Financial Reporting Standards. And now you will see the accounting standards of all the countries are converging towards a common rule, towards the common disclosure requirements or reporting standards. In India, the Companies Act 2013, it determines the minimum information to be disclosed. I repeat, it determines the minimum information to be disclosed. If you need to make more disclosure, you are free to do that. But whatever the bare minimum requirement is there, you need to at least follow those bare minimum disclosure norms. So the Companies Act would say as to what would be the disclosure norms. So at least those things needs to be disclosed. Then in addition to that, you have SEBI, Securities Exchange Board of India, which is the controlling or governing authorities for the stock exchanges. SEBI, Securities Exchange Board of India, or the Stock Exchange Board. And then you have the different stock exchanges wherein the different disclosure requirements are required for the companies which are under their jurisdiction. What we mean to say is the bare minimum requirement is given by the Companies Act. In addition to that, the SEBI or the other market regulators may ask you for some more disclosure requirements which are under their jurisdiction, right? So when we talk about the interpretation of the gaps and accounting standard, what we see is a gap is nothing but the accounting practices which are prominent in a particular country, which are being followed, which are having a huge impact on the accounting process. Whereas if you talk about the accounting standards, these are authoritative in nature, issued by the standards board, accounting standards board. Right? This gap are country specific, and in case of the accounting standards, now you have international accounting standards. So the Indian accounting standards are now called as Ind AS, and these are in line with the international accounting standards also. And as we have seen, when we talk about the international financial reporting standards, since a company is doing its business in more than one country, the cost of conversion from one country norms to the other country norms was huge. So looking at this problem, what they have done is the accounting standards board of each and every country. They came together and they have formulated some rules, or the accounting standards were made in such a manner that it would be almost in line with the accounting standards of different countries, so that the converging or conversion problems for these financial numbers may not be there or may not exist in future. Right? So this is all about the importance, postulates, or the accounting rules. So let us see as to what we have done in today's class. First, we talked about the importance of the rules, accounting rules. Here we have seen that irrespective of the user of accounting information, it can be an individual, it can be a government, it can be an investor, it can be a money lender or researcher, right? Irrespective of the user of accounting information, irrespective of the type of organization, irrespective of the business of any organization, manufacturing, IT, or e-commerce, any business, the common thread which goes for all the type of organizations or activities by the accountant are the rules to be followed by them, the rules followed by them. What they do is they keep on following the same set of rules consistently year after year, which gives them the benefit of reliability, dependability. The numbers given by them are more dependable now. There would be transparency, there would be comparability. So these were all discussed in the importance of the accounting rules or accounting standards or the accounting principles and things like that. Then we have seen which is the governing body which issues the accounting standards or accounting rules or the gaps. We've also seen that these words like the accounting standards, the accounting principles, the accounting postulates, all these things are interchangeably used by different authors. At this point of time, you may not be much concerned about the difference because there is a hairline difference between these. Need not worry about them. All you need to do is just understand that these are the rules which needs to be followed by the accountant whenever he is performing his accounting function. That's it. So this would take care of our class today. Right? Thank you so much.